Winston Churchill said, "Americans will always do the right thing after exhausting all the alternatives." With a budget deficit that unexpectedly doubled in the past year to $2 trillion and more deficits over the next decade expected, what is the right thing, and are we doing enough today? We're going to break it all down for you right now on UBS Trending. Hi, everybody, and welcome to UBS Trending. I'm Anthony Pastore, and I'm excited to be back in the studio with Bill Sterling from GW&K Investments. Bill, good to have you back in the studio. Good to see you.
Great to be here, Anthony. Thank you.
I started with that quote, which you put in a recent report. I couldn't not mention it. Of course, Winston Churchill, one of the great orators of all time. But as you said, it was a little bit of a backhanded compliment, right? But it was really kind of set the tone for what we're going to talk about today, which is this recent data. It's pretty shocking that the U.S. deficit doubled to $2 trillion last year, and there are some agencies that are expecting that we will see more and more deficits coming over the next 10, 20, 30 years. What does that mean now? How are we being affected by that?
Sure. Well, I think, in the short run, it was actually really good news for the economy that the deficit doubled last year, because that was like 4% of GDP. And when the deficit goes up, it's injecting money into the economy. So remember, everyone expected a recession last year, and instead we got 2.5% growth. I think that was part of the story that was nobody was looking for that. It was on nobody's bingo cards at the beginning of last year.
Right.
And that deficit helped consumption. It feeds right into corporate profits, because if people have more money in their pockets, where do they spend it? They spend it with corporations. So it was a good thing, but it also probably led to higher for longer interest rates and a lot of concerns about the sustainability of deficits going forward. Because just yesterday, the Congressional Budget Office did an update of their long-term numbers, and they're still predicting average deficits of $2 trillion for the next 10 years. And showing what that does to interest payments the government has to pay on its debt, and to the overall debt to GDP ratio, which is a pretty key indicator of debt sustainability.
Something you talked about in your report that I read, you talked about, obviously we know that the government did fund a lot during the pandemic to keep the economy on track and to not have us fall into another great recession. But you said as pandemic impacts fade, why haven't deficits normalized, which in other circumstances, like when you look at post-World War II, that's what happened. What do you think was the cause of that?
Yeah, well, you had close to $3 trillion deficits in 20 and 21, and then it dropped to $1 trillion, which was the pre-pandemic level in 22. And that was partly because some of that emergency spending went away, and it was partly because they had a bumper year for tax revenues due to the bull market in equities and bonds during the pandemic period. But a lot of that reversed last year. So you had interest rates climb, you had tax revenues go down because of the bear market effect from 2022, and you also had soaring expenses for Medicare and Social Security and the like, which all got indexed up, right?
That's right. And that's exactly, you pivoted perfectly, Bill, because to me, this is such a fascinating topic, which I don't think enough people are really talking about, which is when you look at the generational boom, the baby boomers, it's in the name. I mean, there are so many more of them today than there were in the last generation of retirees. So Social Security, Medicare, Medicaid, I mean, they're all potentially in some sort of trouble from either being cut or changed. Maybe the question is are we doomed here as we look down the younger generations? What's going to happen with all of this?
Well, I think these projections for ever rising deficits over the next 10 to 20 years are basically totally tied to demographics. They're, the fastest growing part of the population will be 90 years and up,
right, and
followed by 75 years and up, and so on. And when these programs were set up back in 1940, there were 40 workers basically for every retiree. In 1960, there were 5 per retiree. We're now down to a little under 3 workers per retiree, and in the next 25 years, it'll go to 2 to 1. And it's those workers who have to really be paying out of pocket, right, for the retiree expenses. So that's why the system is probably going to need serious reform before long.
Those numbers are so staggering to me. Talk about painting a picture from 1940s until maybe 20 years from now. And some analyses are even showing that, you wrote about this too, that Social Security, that the trust fund might deplete only by the early 2030s.
Yeah.
So that's right around the corner.
Right, and basically what happens, Social Security is not going to go away. They will fix it, but it will be a painful process, because if they don't do anything and they hit insolvency in the early 2030s, the benefits to new retirees would fall 23%. So like $17,000 per couple. And obviously there would be a hue and cry if that happens. So politically, the cost of doing nothing the cost of doing something about it will exceed the cost of doing nothing.
Doing nothing, right.
By that period. And, but it's going to be hard because politicians call Social Security the third rail of the U.S. political system. You touch it, you die. They're going to have to touch it. And that's what's going to be very interesting, especially when you look at the context of the ever-rising debt-to-GDP ratio.
Yeah, I feel like, and I just said this to you earlier, I feel like we probably won't see a whole lot of that conversation happening on this campaign trail. It might come up here and there, but it's going to have to start coming up in future campaigns for local politics, obviously for congressional seats and presidential elections. So maybe I'm hoping against hope that you'll have this answer for me. Is there a silver lining out there right now? It sounds like a lot of doom and gloom we've gone in with. Is there a silver lining, and what is it if there is one?
Well, I think if you go back to Winston Churchill quote,
right.
Something we'll probably get done about eventually on this, but it may be a bumpy road on the way.
Right.
And I think that if you just look in the near term, neither likely presidential candidate cares a lot about fixing the deficit, right? In fact, the CBO's latest numbers are pretty rosy because they assume that the tax cuts, the Trump tax cuts in 2017, will be sunsetted as was written in the law in 2025, at the end of 2025. Mm-hmm. If they don't do that, there's a lot of sort of support on both sides of the aisle in Congress for extending those tax cuts. That's a $4 trillion price tag over the next 10 years. There was a group in Washington, a nonpartisan group called the Committee for Responsible Federal Budget, which has estimated that to just stabilize the debt to GDP ratio over the next decade, you'd need $7 trillion of savings. But if you basically say, nope, here's another $4 trillion of the opposite, you've got basically a challenge on your hands.
And that's $7 trillion within a decade.
That's correct.
Right. Amazing. I mean,
yeah.
Think about 10 years, it goes as fast as you can imagine it will. It seems like it's a long way away, but it really isn't in the world of politics and when you're talking about trillions of dollars.
Yeah. And I think the Congressional Budget Office makes it pretty clear this is not automatic disaster.
Right.
It's a little bit like when the doctor goes to you and tells you your cholesterol is high, you should think about lifestyle changes to deal with that, or your blood sugar is too high. You can still say, but another donut's not going to kill me, is it? Say, no, you can have another donut. But maybe having another 1,000 donuts is something you should think about. So, that's kind of what Congress is facing, that situation where there are plenty of people say, one more big tax cut won't hurt, will it? But $4 trillion over 10 years is something to think about.
That's right. Well, it does go back to that Winston Churchill quote, right?
Yeah.
Yes, we'll try a bunch of things, but eventually we'll do the right thing. So as we wrap up here, Bill, what's maybe the takeaway for investors, the kind of here's what you need to know as you walk away from this conversation?
Yeah, well, I think when you look deeply at the CBO analysis, they're very clearly saying this is not a guaranteed fiscal crisis. You don't have to lose sleep over this necessarily, but it is a risk scenario, and it means there are likely to be bumps in the road along the way. So it is actually a clarion call, I'm going to be boring here, that'll be boring, for prudent diversification across asset classes and even U.S., non-U.S., because there are scenarios where actually fixing the deficit could mean a weaker dollar because, the strong dollar is due to a classic policy mix of having massive fiscal deficits, high real interest rates, capital flowing into the U.S., and we're at like an all-time high of valuation of the dollar versus foreign currencies. So I would think even on the international domestic allocation side, be diversified.
Bill, I really can't thank you enough for coming by. It can be a complicated topic, but I think the way you put it together today really simplified it and even gave us a little bit of maybe some hope on the horizon. So thanks for coming by, Bill. Good to see you.
My pleasure. Thank you. Good to see you.
Of course. Get you back soon. And for more information from great partners like GW&K and more from our Chief Investment Office, please visit our Insights website at ubs.com/views and make sure to follow UBS on all the social media channels. You can also follow UBS Studios at our Instagram channel at UBS Trending. Lots of great content there for you. In the meantime, if you have any questions about your portfolio or anything that Bill and I spoke about today, make sure you're talking with your financial advisor. Until next time, I'm Anthony Pastore. We hope you have a great rest of your day. And remember to keep your eyes on what's trending. We'll see you soon.